Hello there and welcome to the weekly market update. Again, I'm joined by Bill, Chief Economist at markets.com, and we're going to talk this week about lots of topics again. Ben Bernanke, of course, lots of UK data. But let's kick off with the UK data, Bill. We had the unemployment numbers yesterday, which everyone was really quite encouraged by. So what's your pick on that?
Well, I think, Angus, what we saw in yesterday's UK unemployment numbers was the same thing we'd seen in the previous non-farm payrolls from the States. The improvement was in temporary workers. And if you look at this, if you look through yesterday's data, the number could be anywhere from plus 50 to plus 61,000. And I think most of these are probably Olympic London oriented. I think this is what the markets looked at today, saying, maybe these numbers, albeit okay, are not as strong on a permanent basis as we thought yesterday.
Okay, but what was interesting is that today sterling once again has made a really good move against the euro. Would you have thought that that is more down to euro weakness?
Yes,
rather than sterling?
And I think that's one of the things that we've seen. For the simple fact is that almost the safe haven currency away from the dollar, the safe haven currency in Europe is sterling. And if you look at sterling euro from like 2008, it's improved almost 50%.
Yeah, and so really you're saying the unemployment data wasn't as rosy as many have made out. Again, I suppose if you look at the retail sales figures today, they weren't anywhere near expectations. So here we were sort of thinking the Jubilee is going to be great for retail sales, but is it just down to the poor summer we've had or something?
I think so, because if you look through the data, one of the things they were saying about retail sales was one of the reasons it was so good, all of a sudden we were seeing end of summer sales in like April and May rather than August and September. And I guess probably if you look through, the only good things that they were selling were Wellington boots and raincoats. And even if you look at like in the retail sales, you're looking at like instant barbecue kits marked down like 75 to 80%. But I think one of the key points, and we're looking at probably the third positive day in equities, because I think the equity market now is looking through the Bernanke comment saying, wait a minute, we think the Fed will have to act sooner rather than later. Whether it's on U.S. growth or the concern about the fiscal cliff. We also have the People's Bank of China. Twice now in 10 days, market feeling that maybe, just maybe, China will have to do something, hence the movement in the commodities. Even Super Mario, albeit we won't get it probably until the autumn, even he's talking about another possible rate cut, as we saw from the Bank of England minutes and Mr. Cameron's talk this morning saying, this austerity we were talking about in 2010 could last 5 years. He's now saying it could last till 2020. So the market's feeling that the central banks, sooner rather than later, that sooner maybe before year end, we'll start seeing some more rate cuts, some more quantitative easing.
So that brings us on to Bernanke. Obviously, he's been a highlight of this week, his two-day testimony. He didn't really allude to that fact, did he?
No.
He stuck very much to what they had said in their last FOMC minutes. So whilst the market is very much anticipating more quantitative easing, you've got to ask yourself, well, Bernanke hasn't signalled that.
No.
And also, what are they going to do? What form will QE3 if it does materialise?
Well, excuse me, but that's what you just said it. If you look at Bernanke's comments for 2 days, what area of the market moved? The bond markets, okay? Now they've sort of backed away here, but as you just said, that's why if you look through what Bernanke was saying, there are a number of options, but they don't really know. But the key thing that they would be looking at would be doing the same thing that the ECB did, zero deposit rates, or the IOEUR, which would be interest on deposits, okay? But even Bernanke alluded to the simple fact is, wait a minute, the ECB did it the first time, but we've only had it for 1 week. We really haven't even had a chance to see, quote, whether it's working or not.
Okay, so the consensus is that something will happen, but no one's really sure.
No.
Well, there'll be, maybe not even Ben Bernanke knows. Okay, so next week we've got a lot to look forward to, obviously the start of the Olympics. Is there anything there that you think that will do for the UK economy?
Well, I think, as you just said, That's what we're wishing, hoping, praying. You know, you've got any numbers from like 12.5 to 16.5 billion coming into the country. Now the key thing that I think we're hoping for is a massive increase in tourism. And I know the Olympics haven't started, but even today, you know, that weird thing up in the sky, that big orange thing, that sun,
we haven't
seen, you know, and people will say, what is that? But I mean, even just on the ground, the number of tourists that are here and the number of staycationers here in the UK that are staying home, okay? So I think from a tourist aspect, that could be positive. But unfortunately, somehow I just can't see Usain Bolt, once he finishes, if he does win the 100 meters, rushing into the local departmental store and spending tens of thousands of pounds. I think he'll probably be on the first plane back to Jamaica.
I think you probably hit the nail on the head. The short-term fix really to the UK economy will probably be as quick as it will take for him to finish the 100.
Exactly right.
Thanks very much again, Bill. Thanks very much for listening.